Good evening, everybody. This is Michael Filighera. I'm with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Tuesday, August 17th, 2021. Well, the NASDAQ continues to throw us curveballs, but today it included the balance of the indexes, the Dow, the S&P, the NASDAQ, and the Russell, along with the Dow, all threw us curveballs today in terms of the intensity of the selling early in the session. Now, it broke again below levels that I was counting, and therefore the decline could not go below 14,917.25, which was the starting point for what I was intending to call wave one of minute three. The market declined again today, substantially below that level, reaching a low of 14,897 before rallying a little bit. As we start here in the Globex session, you can see that we're dropping again. So this is now really bringing about a situation where you can see that I've already taken off a lot of the count, all of the Fibonacci, so that I can really take a look and see what, if anything, I need to do to make this count reflect what actually is going on. And maybe it is that I no longer need to be looking for new highs. The highs may be in for right now. And that would be determined by me backing up and going out to, say, the 4-hour chart, opening it up and taking a closer look. Oh, come on. Oh, come on, computer, do me the favor. Thank you. And taking a look at how this is all counted. Now, what immediately bounces into my head was that we may revert this back to 3, 4, 5, or leaving this 3, this is 4, and this is the 5th. As ugly as it is, that's a 1, a 2, a 3, and a 4, and a 5. It's a triangle. It did angle. It did spike. It did reach a new high. Maybe 15,172.50 is it. And this is just the start of the larger correction down. Now, again, I don't necessarily feel that, but it has to be included as a possibility, particularly because of what the market is now doing. But here's how I'm going to leave this for right now. I'm going to continue. I'm going to leave this count as is, even though this was negated today. I may need to push it out. I may need to take it back. I'm not sure, but I have to allow the market to tell me. Now, if the market has full intentions of picking up this advance, there is no turning back right now. The market has to turn, it has to move, and it really has to do what it did yesterday. After reaching that low, it blasted. It has started it, but you can see they're faltering. So if there's going to be continued selling and they again come down and they break below 14,897, then we're looking for them to start to break below this low at 14,774. And if that's the case, then the highs are in. The highs are in and we're off to the races in a much, much larger corrective phase that is going to take several years to unfold. In fact, I'll just kind of go over it real quickly. If this thing starts to break, this is our, well, that doesn't work. There you go. This is our maximum chart. This is all the data that I can get. And basically, if I go to the NDX, the cash market, I can go back even further. But right now, this works. So this comes as 3 and a 4. So basically, we've been in a cycle wave 5. Cycle wave 5 up. Within that cycle wave 5, there are going to be 5 waves up of primary degree. We have 1, 2, 3, and 4. So we're in that 5th wave of primary degree. Within that, we're going to have 5 waves of intermediate degree. There's 1, 2, 3, 4. So we're within the intermediate degree 5th wave. And now I can bring it down. If I'm going to take it to the weekly, then we're in an intermediate 5th wave up. And there's going to be 5 waves of minor degree. 1, 2, 3, 4 is what I've got so far. That may change. The 5th wave may have already been in it, and I'm just going to to reflect that within our count, to reflect what the market is doing. So, but right now, I want to continue to give the benefit of the doubt to the NASDAQ, to the market, that the intent is to pick up and move to additional new highs and push us up to levels that we have been forecasting, which is like 15,200, 300, 400, up to 700. We have Fibonacci that would suggest that that is the achievable levels for this market. And they do correspond with an intermediate fifth wave going up, a minor fifth wave going up, a primary fifth wave going up. We can now just continue to put in, nope, wrong one. We can put in some Fibonacci extensions that will reflect that. This is the bottom of wave 2. So I would start there, go up to the top of wave 3, which is right there, down to the bottom of wave 4. Okay, so that gives us our first levels. So intermediate wave 5 projects to 16,332. That's where intermediate 5 would be equal to intermediate 3. Now, it's already surpassed 618. That has, and it's already got back down below it. But that level was at 14,062.75. So it's already surpassed that. But in fact, it did go up and make a new high above that level right there at 72. And that could have completed it. But we continue to look for these higher numbers because the Fibonacci does really suggest it. And the more common areas are going to be even higher. So, but what I can add now is an additional layer. Come on. And then we'll take that up to the top of 3, which is here, 34. Let me do this differently. Let me bring this down to the 4 hour so I can get this all correct. We're just rebuilding it. That's basically what I'm doing now, is I'm just rebuilding those Fibonacci so that you can see along with me where this thing could land and why I continue to give the benefit of the doubt to the rally. I may switch forward over to here. So let's put 4 there. So this is our next layer. And you can see here, we're still above 16,000 as to where minor 5 should start to come in. So I continue to feel it's like, we're not done. But the market is starting to let me know we may just well be done. Either that or this fourth wave has extended out and it's just continuing. So these are all possibilities. But I need the market to start to tell me more clearly what is going on and what it's doing. And it will do that. I just have to be patient. So in that meantime, I'm going to bring this back down to our hourly chart. If I cannot add any more levels to where I think I don't have a fourth wave in the minute level. And so there's nothing I can do. So this is where I'm kind of stuck with that, but I do have some levels of where possibly this third wave should go, but it's breaking down. And if indeed it breaks below what is being labeled as minute 2, then I'm not sure, it definitely is not this particular count. Now, could it be that this again is minute 1 and this would be minute 2 and then this is going to be minute 3? Yeah, it could, but the market has to tell me. This does not give me a lot of confidence that their intent is to go up. And we're starting to get that bad news to filter in, that concerning news to filter into the market. What's going on in Afghanistan? The Delta variant, which is really just smothering the southern states of the United States. And we now got the Fed chief going, gee, I'm not really sure what the Delta variant is going to produce against the economy, if it's going to have an effect on the economy. They don't know yet. Well, toss that onto the worry pile. So for the market to go up, it definitely would be climbing a wall of worry. And we're going to see a whole lot of things change. And so as it climbs a wall of worry, when it gets any fright, any scare, this is what we get. This is what we get. This is what we get. This is the market going like, oh no. You can see these sell-offs are frequent and violent when they happen. And if you've traded it, as I have, you're sitting there wondering like, holy crap, we made a high, and in that same time frame, the market went from 15,119 down to 15,963. Wow. Hello. That was all in one swoop. That is from the opening in 2 hours. Like, wow, okay. Here, yesterday, this was the opening, 15,112. And it got all the way back down to 14,917. 200 points. Boom. And then rallied back up 170 points. 200. So here we go again. Zam, slam dunk. Well over 100 points. And then rally back up. Except now it's not continuing to rally. This might just be a little pullback, and it catches its breath and starts to push. So here is what I can tell you how I intend to trade this. Right now, these moving averages have finally all clicked to the downside. That's on the hourly chart. Even the 200 is starting to angle down. If this market has intent on really pulling this off and getting back up above 15,100, it has to turn and go and go and go like it did yesterday. There's no looking back. They come in for Apple again. They come in for Google. They come in for Facebook. They come in for Microsoft. All the stocks that they pushed yesterday, which created that, they need to do it again. So either this was the mistake and this was the answer, or they turn and they go again. Continuing to climb along that wall of worry, by the way. Now, if it starts to break down below this level, this is next. That's the next support. This is the next support after that, and then after that. If it breaks below the bottom of what I'm labeling as wave 4, the highs are in, and we're going down. If it holds that, then all of this was corrective, and we still have a larger minor fifth wave to do. These are all possible. How much probability percentages I want to give to that, I don't know, but it is possible. The market can drop all the way down to this level, don't necessarily break it, and then turn and rally. Again, I would think it's going to be news generated. They're going to get something that's going to shake off all that bad stuff and put it out there on the periphery and just keep it out of everybody's view and just deliver positive. We're going to go, we're going to go, we're going to go, we're going to go. Tomorrow we have the Fed minutes. I don't think there are going to be any surprises, but you know, the market has thrown some wrenches into the whole thing after they read those minutes. That's just the way people react. So be it. If it comes out like everything's hunky-dory and inflation's in control and blah, 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 they may just decide to step in and buy it. And they'll come after those big names again. Apple, Amazon, AMD, PayPal, Facebook, Google, Intel, Microsoft, Micron, Netflix, NVIDIA, Tesla. These are the big boys. Moderna is starting to rally again. So if they all group together and they go as a group, this is going to be enough to push this index back above 15,100, but it's got to keep going this time. It's like, don't hesitate, don't wait, don't start selling off. It has to go. Otherwise, we're stuck in a box, and it's a big box, and it's not going to be healthy for the market. So, downside, we have the marching orders. If they start to break here, And that's next support, that's next support, that's final support before we get a really solid sell-off. If the market drops 200 and gets itself down to here, red flashing lights should be signaling caution, caution, caution. A break there sends our support. A break sends our support down to 14,445. So it could drop an additional 300 points before it reaches next solid support. Again, daily, it broke below the 20. Yesterday it did, but see what it did? It retook it and closed well above it. Today, it broke it and closed below it and continues to trade below it. So it's not even able to get back above the 20 moving average on the daily. This is negative. So if it comes down on its way to any of these support levels and it breaks below the 50, good night, nurse. It's done. The market is, those are the clues. We have our moving averages on our daily, weekly, and monthly. And if they start coming into play, rally is over in terms of big producing rallies that will take us to new highs. We're going to continue to have rallies. It's just the nature of the market. But we will be changing our focus and be looking for more short entries than long entries and building positions that you could carry that reflect the moves down to these support levels. So that's the picture. I hate to put it that way without wrapping around more specifics, but I don't really have a whole lot more. I mean, we could throw just some retracements, but I'm connecting things that just don't really relate to one another, but I'm just taking it from that low. Come on, computer. Just put that. Thank you. And we're going to put that there. So all this does is just give us some support levels coming off. You can see it came down today, and that's putting Fibonacci retracements from the low of 4 to the current high. So if that's saying that all of this is corrective of that move, okay, fine. Then what are we looking at? Possibility, it already came down to 0.7, 70.5%. That has to hold. Break there, that's what it brings up next, 14,774. That's the next support. These would be minor. They'll provide some support, but nothing major. and that's the name of that tune. So again, I just want to tell people that are you ready? Are you prepared for what may be coming? And so it's going to be important. And I want to just remind everybody that what I have on offer is that I do have a trade room. And in that trade room, this is the type of things we discuss. We discuss possibilities, we discuss Elliott, we discuss Fibonacci, we discuss moving averages, we discuss trade entries, exits, all kinds of different things. But it's to enable people to make good trading decisions and to be consistently profitable. In a market like this, it's not always advantageous, but it helps and keeps us out of trouble because you're able to take some instruction on risk management, on position sizing, on how that all works with your account size, et cetera, et cetera. So there's a lot of things that are in a trade room, and that's what I am trying to offer. A trade room that is based on education and personalized education versus just a trade room, come in and follow my trades. I'd rather teach others how to really become independent traders, successful independent traders using simple, time-proven techniques and strategies. It's nothing new. These are just basic things that have stood the test of time. I'm running a summer promotion for my trade room, and now I'm extending that. So far it's been through the month of August, but I'm going to extend that to include the month of September. This is how important I feel that people be prepared to be able to trade, to step in and trade what's coming. These are just little previews. of what will still be out there to come on a bigger scale. I'm going to leave it right there. If you have an interest, stay tuned, because I'm going to be putting out a separate video, and it's actually going to be on the S&P, but it's going to be a midterm or a view on the balance of the year for the S&P. Within that video, there will be a link that'll take you back to the promo pages, and then you can read and you can choose if you have an interest in joining the trade room. I hope you do, and I look forward to seeing everybody there. And the next update will be tomorrow, August 18th.